What's up, everyone? My name is Ale. Welcome back to my world of stocks, and welcome back to my series called Stocks My Viewers Want Me to Review, where I pick a stock that you guys mentioned down in the comments section, and I do a quick review video of it, and I share my thoughts and basically tell you if I would consider buying that stock myself. Now, this is our fourth episode so far, so I'll leave a link for you for the playlist down below in the description in case you want to see past episodes. But this time we have a comment here from Dinesh Murugisen. Sorry if I pronounced that wrong. But this person asks, "Hey Ale, thank you for all your videos. Can you please talk about Snow? Warren Buffett bought the IPO, but it's been crashing ever since. I am thinking about buying the dip." Sure, let's take a closer look at Snowflake stock, ticker symbol SNOW, and we'll do that right now, and I'll give you my opinion on all of it. All right, now if you've never heard of this company before, they're a relatively young one, being founded back in 2012 over in San Mateo, which is that general kind of big tech Silicon Valley area of California. And they later went public on the stock market just a couple years ago in late 2020, which at that time it was actually the largest software IPO in history at more than 3 times the size of the previous leader. And a big reason for that was because it was famously backed by Warren Buffett's Berkshire Hathaway, who invested heavily in the stock. I believe that ever since then, Warren Buffett has also held on to the stock ever since then, even after being down on his position by almost half the value. I don't think he's ever sold it. And by the way, he's got an even better price than everyone else because he got that like pre-IPO price, but he's still down almost 50%, which goes to show, how much the stock has fallen. But either way, he still owns over 6 million shares at over $800 million worth of it. So it's a sizable stock there. We'll talk more about the stock crash and the valuation though in just a second, because first I want to quickly explain what they do. So it gets a little complicated here, but I'll try to just keep this as simple as possible. This is basically a high growth cloud computing tech company that offers many different data management solutions to both small and big businesses, basically helping them collect, manage, store, analyze, and even share and distribute their large amounts of data through the cloud. Now, of course, you're probably thinking, well, isn't there like a ton of different cloud companies out there that do these things? And yeah, there definitely are, especially the big ones, like Amazon, Microsoft, Google, and there's tons and tons more of cloud companies out there. But what you need to understand is that most companies use multiple cloud platforms. In fact, according to S&P Global Market Insights, over 98% of corporations are using multiple cloud platforms, and around 45% use more than 5 cloud platforms. So not only are companies' data spread across multiple devices and departments, but they're even spread across multiple cloud platforms as well. Well, what sets Snowflake apart from the competition is that they're a cloud neutral platform that takes that data from all these different areas and stores it all under one roof so that it's easier to analyze and manipulate using their services and apps. And they make it much easier for companies to do this. In fact, they even allow companies to develop their own apps with the help of Snowflake to better analyze their data and make it more useful. And one of the cool kind of innovative things about Snow is that they even host their own data marketplace where these companies can then take their now much more valuable data and actually sell it to other companies, or of course just purchase access to even more data for themselves too. So it's a pretty revolutionary thing here that Snow has been doing with the cloud, and it's led to a lot of success for them over the years as they still continue to grow their customer counts by around 30% or more every single quarter, even during these challenging times. They've also landed some really large customers like Capital One, Adobe, NBC Universal, Electronic Arts, Instacart, Novartis, Anthem, and a lot more. And not only are these customers sticking around, but they're also adding on additional services over time, which is why Snowflake has such a very high revenue retention rate of almost 160%, which is very impressive. And because they're primarily a software company, they also benefit from software like margins that tend to be extremely high, with their adjusted product gross margin at a very impressive 75%. Unfortunately, though, Snowflake is not yet profitable on a GAAP basis. And in fact, those net losses have only been getting worse every year. The Bulls don't really see that as a huge issue, though, for a number of different reasons. Like, first of all, both their sales and adjusted profits have been growing by large rates that it should really be just a matter of time until Snowflake can become a very profitable company over the long term. For example, during the pandemic years of 2020 and 2021, sales skyrocketed by triple-digit percentages, and while that growth is slowing way down now because of the deteriorating economy, falling to 70% growth last year and now ending up at around 40% going forward, it's still pretty high growth overall, and especially having to compare it to those giant pandemic years. On top of that, while Snowflake is not technically profitable on a GAAP basis, they've actually made huge progress, at least on an adjusted basis, and you can clearly see that in their strong cash flows that improved from negative $200 million of free cash flow in fiscal 2019 up to less than $100 million lost the year after. Then it actually turned positive at $56 million the year after that, and then it grew by a gigantic amount up to almost $500 million of positive free cash flow last year. And even looking forward, there's still a lot to be optimistic about too. I mean, their total addressable market is estimated to be worth almost $250 billion by 2026 alone. For context, Snowflake only did about $2 billion in all of last year in sales. So that's well over 100 times larger than their current size. And as it stands, Snowflake still does the vast majority of their business in the United States, which leaves plenty of room for international expansion as well. And because of this, at a time when the macroeconomy is a disaster and most tech companies are in decline coming off of the pandemic and having to lay off like hundreds of thousands of different workers, well, Snowflake has actually been hiring more workers, which is a pretty good sign of confidence from the management team that they can continue to grow even in this horrible environment. But despite all these positives, we know that Wall Street right now is simply not interested in highly valued stocks that are still generating net losses at a time when interest rates continue to rise, and therefore the stock continues to get destroyed, having already crashed from a high of over $400 a share all the way down to just a low 100 range today, which is a giant crash of over 65%. That now leaves it even lower than where they essentially IPO'd in the open market, a couple years ago. So that is a pretty big drop there, and that's despite the fact that we know that Snowflake as a company, as a business, has actually grown by leaps and bounds since then, yet they're actually trading at a lower price. So is that crash justified, or is right now the perfect time to pick up this really undervalued stock? Well, the problem with Snowflake, and the reason why I've never been interested in owning it myself, is because it's not really undervalued even after this giant crash, because you're still talking about an adjusted forward PE ratio that is over 1,000% more expensive than the sector, and even a longer term like 5-year adjusted PEG ratio, price to earnings to growth ratio, it's still over 375% more expensive as well. Now granted, profits may take some time to ramp up. I totally get that. And I agree with that because of the high margins. But even if we look at the much more forgiving comparisons of revenue, they still trade for a price to sales ratio that is close to 500% more expensive. And even their price to free cash flow is also 367% more expensive than the sector as well. So there's not really any other way to look at Snowflake other than just a very highly valued and expensive growth stock. And look, as a speculative stock, I totally see the appeal here given the giant crash that has brought down their price to sales ratio from over 200 to only around 20 today. That's a much cheaper stock than what it used to be. but it is still expensive. And in this environment, it's just really hard for me to look past that. And look, I would say that at the end of the day, this type of stock here is very buyer dependent, meaning that it really depends on what you specifically are looking for. Because if you really believe in Snowflake's business and you think that that valuation will come down over time because they have so much growth and so much growth potential for the future too, then yeah, right now might be a great time to buy this stock while it's down, especially if you're out in the market looking for a speculative but high growth, high potential type of cloud computing tech stock for the future. But for me personally, not only do I already have a ton of cloud computing exposure through many different stocks, like I own Amazon, Microsoft, Google, Alibaba, Baidu, Tencent. I mean, I own tons of them. And in my opinion, all of those stocks are much safer too. And sure, they may not give me the same exact direct exposure to what Snowflake specifically does, but many of them do somewhat similar things, and they either do that already or they may be doing it more in the future. So I'm not really too worried about getting that specific of exposure to what Snowflake does. I get just a ton of broad cloud computing exposure from there. And on top of that, I also own already a lot of disruptive, innovative, high growth, speculative tech stocks just in general too, to where I don't really feel like I need to have Snowflake, because I own some stocks that I think have just as much potential as Snowflake, but that are actually trading at much cheaper valuations. And that would include stocks like Palantir, who is very disruptive in data management and artificial intelligence and a few other things. I own Neo for electric vehicles and autonomous driving. I own SoFi, who's a fintech for lending and investing. I own Upstart, another fintech disrupting lending and credit. And all of these stocks here trade for PS ratios of only 1 for Upstart, which is really good. You're talking 2 for Neo, 3 for SoFi. That's very reasonable. 8 for Palantir, which is a little high, but there's other things that I just really love about Palantir. But then you look at Snowflake, a PS ratio of like 20. So that's extremely high. So for me, it just doesn't feel like I have this huge necessity to go out there and bet on Snowflake stock. It doesn't mean that it's not a good buy. I can definitely understand why a lot of people might be picking it up right now. And I understand why even Warren Buffett wants to own this stock. But for me, it's not the right fit. It's not the right fit for my portfolio. It's not what I'm looking for. So it's just not the stock that I want to own. But hey, look, that's just my opinion, guys. And we're all different investors out there. So I'd love to hear what your opinion is on this. And are you picking up Snowflake stock? Do you like it? Or are you more with me? You think it's just too expensive, it's just not worth it, and there's better, safer stocks out there that can give you either very similar exposure or still just very disruptive, innovative exposure to something else. So I don't know, that's just how I feel, but I'd love to hear your thoughts. And if you have another stock that you want me to review, make sure you let me know down in the comment section as well, and I may pick it for the next video in the series. But thank you for stopping by, my friends. Thank you for all your support. It really means a lot to me. And I will catch you in the next one. Take care, everybody. Bye-bye.